good to have you with us here on a Monday morning. I'm Marlin Bohling with you as we watch your ag commodity trade to start out a brand new trading week. And this is the remaining portion of the trading month of October. Hard to believe it's almost the end of the month already. Here to help us take a look at today's market activity in studio, we have Chris Swift with us. Chris, thanks for joining us here today.
Marlon.
Good to have you on board once again. So let's talk about this market as it's opening up here this morning. Kind of quiet.
It is.
Corn market fairly flat. Let's go ahead and take a look at our prices here and run them down. I'll get your analysis here on stuff. So let's take a look at this corn board here first. We're down just couldn't be much quieter. Down 1/4 cent at 348.5 on December. July down 1/4 cent at 378.5 per bushel. Let's switch over to soybeans right now. And here we have the November up 1 3/4, January 2 1/4 higher now at 988 3/4, and July 2 3/4 higher at 1016 1/4. So even though it's firmer, I mean, it's not running away. That's by any stretch there. Wheat trade today. Let's take a look at Chicago first. We have December down 2 3/4 at 424.5, only 1 tick from our low of the day. In Kansas City, wheat right now, December is trading 2.5 lower, 422 3/4. That's only 1 tick from its low of the day. What about Minneapolis spring wheat trade today? We have December down 1 tick at 616 3/4. July of next year, though, up 1.5 pennies at 640 3/4. And to get you updated on cotton here, we have the December contract now 26 points higher at 68.46 cents per pound. I did want to bring up the U.S. dollar and crude oil once again. We did have a softer opening in the stock markets. The dollar index down 200 points right now on December at 94.630, and the crude oil trade, let's take a look there in West Texas crude. We're 20 cents higher on December at 54.10. So, Chris, with all this information here, how does it all tie together? Can you connect all the dots for us here this morning?
Probably not. It wouldn't be a good commodity market if you were being able to connect the dots. Corn probably the most interesting last week with President Trump laying off the
RFS rule?
Yes, the ethanol plant. So the ability to relieve some of that pressure off of them helped the corn market to give it a little boost last week. And although it was not much of a boost, it probably will keep it from moving much below that 350 a bushel intrinsic value.
Okay, so soybeans are a little firmer here this morning. Not a lot. What do you think is propping up the soybean trade here for now?
Probably nothing more than the soybean oil. The soybean oil market has been relatively stronger the last 2 weeks, and more likely than not, it's just more oil usage than what it is anything else. The soybean meal remains at the lower end of the trading range, as do the beans themselves. So the bean oil is the only one that has been able to move up any.
You know, now that you bring that up, I had heard last week that South Korea had bought a large portion of soy meal, but it was all from South America.
Right.
And so I guess I heard some analysts saying that because of that currency exchange rate with the real at such a discount to the U.S. dollar, that's why they're getting the business.
Yes.
I mean, do they have much more left to sell when it comes to soybeans and soy products down there?
Probably not a great deal, no. They're not a large producer of either. And, you know, from what we have seen from the dollar movement here lately, that rising dollar, and with last week's comments by Draghi, giving the euro currency a little bit of weakness, too, that strengthened our dollar. So maybe what we're seeing is some movement before that dollar creeps up any further, that these exporting countries can get some product moved while it's still at this exchange rate.
Has your company been talking about what they might see for harvest numbers?
No, not right offhand. We're still a little ways from that, but in the soybean market, they've still got quite a few beans left to go in the northern section. I'll be interested to see how close they are to wrapping up the corn this afternoon with the USDA report.
Okay, well, I'll tell you what, we'll bring you back here in a little bit, and Chris and I will actually talk about what's going on in our livestock trade, and I can't wait to hear Chris's comments about this, because he is kind of a specialist when it comes to the cattle and beef markets, and man, there's a lot at play there right now. We'll come back in a moment. We'll see what Chris has to say about that market action when we come back. And we are talking with Chris Swift of Swift Trading in Nashville, Tennessee. He joins us in studio right now, and I want to take a look at our opening trades here, Chris, if you don't mind, on the live cattle, the feeder cattle, and lean hogs. And then I want to take a look at the milk prices here, too, since they're all kind of intertwined here. Let's go ahead and take a look here at what's going on in live cattle first. Big move in October. Of course, it is October. And this actually goes off the board here tomorrow. So you kind of have to take this with a grain of salt. October up 472, you will see if you're watching at home. The December contract has most of the volume, I believe, and that would be up 278 right now at 123.60. Now, when we showed this at the open of the show, Chris, it was up, maybe 170 points. So now we've added 100 points to that, and it's kind of knocking on the door of going limit up here. It's not that far away anymore. Now February up 213 at 127.88 per hundredweight. The deferred months roughly about $1.50 higher, $1.25 higher. Now, if you look at the feeder cattle trade here so far today, on the November contract, we're up 227. January, 253 higher. 158.48 is now our last trade, and that's within a dime once again of its high of the day. March up 218 at 155.18. So I'll stop right there, Chris, and get your thoughts on this. We had a week closed when everybody went home Friday on the futures trade.
Correct.
Heading into the weekend, some analysts told me it was weekend profit taking. And then we find out this morning, man, they just the barn doors, the floodgates opened up Friday afternoon for cash cattle sales. Why? What happened anyway?
Well, there is considerable margin to the retailers, the grocery stores and the restaurants. And if you look at where box beefs are trading right now, in comparison to where they were in the spring, the spreads between boxes and lives are right about the same. Yet both were elevated at higher prices during the spring of the year, and none of the retailers brought those prices down too much to the consumer. So now they can work off of margin to continue to move the volume at lower prices with still the higher prices at the retail level for the consumer. So they're able to make margin, and making margin means volume, and they're moving volume right now.
So have you been able to gather yet this morning what kind of volume of trade, cash trade, was actually done on Friday?
Well, they bought the show list at 119. They cleared the show list out at 119 on Friday
afternoon. How many head are we talking
That's probably close to 135 to 140,000 head is what they traded on the show list.
And it was almost all Friday afternoon?
All Friday afternoon after the close.
Okay.
And still really good beef movement in the retail sector. So as long as the consumer doesn't have any kind of hiccup, I can't see the beef market having much of a hiccup.
Okay, what does that do to the charts? If we take a look at live cattle charts or feeder cattle charts right now, some guys say they're really overbought.
Well, maybe, but they all gapped up this morning. If you look, we're still way below the spring highs. The spring highs that we saw were in the upper 130s for a lot of the cash trades. So even with futures tugging on the 122, 124 areas, that's still well below the spring highs. So we're not overbought by any means. We gapped up this morning. You're at new contract highs for a lot of the contract months. So it's a lot of it's a money issue now with those that are short the market that need to move to get out of the way.
All right. A lot of long positions held by funds, I understand.
Yes, there are.
Anyway, now let's look at the lean hog trade here right now if we can. And we'll give you your lean hog futures right now. We have December up a dime at 64.55, February up a dime at 70.35. So kind of as was suggested, everything kind of quiet. Chris, thanks again for coming in here.
Absolutely, Martin. Thank you, sir.
And, I hope you come back again next week. We'll talk more detail. All right, that'll wrap it up for this particular segment. Christina, and with that, I'll turn it back to you.
Really love hearing from Chris. Thank you so much, Marlin, as well.